Good evening, everybody. It is 8:45 p.m. Saturday, December 27th, 2025. And in today's video, I'm going to be covering Halo's model, or my model, narrative and drawing liquidity. Now, the reason why I have it in parentheses as narrative and drawing liquidity is because I'm going to be specifically talking about my narrative and drawing liquidity and how I end up getting it. So I do want to make a brief little disclaimer before we move forward. If you guys have already or have not yet done so, please watch the Fractal Q&A video before watching this video, because fractals do hold a large chunk of importance in terms of how I get my draws on liquidity and narrative, as they are usually POIs that I do want to see get mitigated. And you will be seeing me mention them indirectly within this video. So if you have not seen Fractal Q&A video, I suggest you seeing it within the WAP, right? It is posted, so please watch it. So, as always, we're going to start off with some foundational information and concepts that will be covered within this video. In this case, we have 4 key concepts that will be covered, and that need to be understood before we move forward within this video. Number 1, structure. Now, why is structure number 1 its entire list? Well, in this term, I put these in hierarchy, right, of importance. Structure is the most important part of drawing liquidity and narrative. Why? Remember that if you are trying to obtain a DOL or a narrative in price for the next session, day, week, month, the only way you can go ahead and predict where price is going to is by looking at where price is coming from and where price is traded to in the recent days, weeks, or months. So structure, meaning candles that have already printed, are going to dictate what price will be doing in future references. So if you do not have the proper understanding of structure, you are going to struggle with getting your overall drawn liquidity and narrative, right? So why is structure so important? Well, so many people focus on cracks and correlations. Remember that cracks and correlations are not as important as structure. Structure is the overall market direction as price is printing. You cannot neglect what structure is doing, as it is exactly what the market is doing, right? It is not a if, and, or but. It is either going up or it's either going down. So this is going to be the epitome of what price will be doing, and what price may be doing in the next day, week, month, or so on and so forth. So second of all, highs and lows. Highs and lows, obviously, highs and lows both make up structure in terms of bullish or bearish structure. Higher highs, higher lows, lower highs, bullish or bearish structure, right? So highs and lows end up creating structure, right? Bullish or bearish, but they are not the same. Why are they not the same? Well, in reference to what I have here in the foundational information section, I do not mean the highs and lows are structure based, but I'm saying for liquidity based, right? Highs and lows are essentially points of interest that I'll be utilizing as liquidity to then see get mitigated later on. So has a high been breached? Has a low been breached? Have we not breached it? All these questions are being asked while you're forming a narrative or a DOL, right? You won't be targeting buy side if buy side's already been rated, if you guys get what I'm saying. Right now, third, you have time-based POIs. Now, why are time-based POIs on this list, right? Well, time-based POIs are on this list because the second one was structure-based POIs, if you guys didn't realize. Time-based POIs are the third thing I look for in terms of gauging narrative and gauging draws and liquidity. Why? In many cases, we may have already hit our highs and lows, or structure-based POIs, but the only thing we're missing is a time-based POI to then initiate the sell-off or the buy program to then go ahead and distribute price to its strong liquidity. So do not always focus on the highs and lows. Also migrate your focus to your time-based POIs, because both hold equal importance when it comes to seeing price reverse. So if this doesn't get rated, this will probably go ahead and initiate a sell-off, or if this doesn't go ahead and initiate a sell-off, this is probably what's failing or what's waiting to get rated before initiating a sell-off. So most of the times, both of these work in tandem to go ahead and support each other and delivery, and I'll be going over that later in this video. And lastly, we have our higher time frame and lower time frame, right? Obviously, 1, 2, 3, or 1, 2, and 4 usually correlate in terms of importance. Why? Structure, highs and lows, and higher time frame and lower time frame, right? Lower time frame and higher time frame structure may be the same, or they may be different. It is up to you to determine whether higher highs or higher lows are being made on the lower time frame, indicating a retracement to then potentially make a lower low and distribute back to its original target, and following the higher time frame bearish structure, or vice versa in a bullish structure, right? So being able to compare higher time frame to lower time frame and justifying if the lower time frame higher high is either a retracement, or if we're actually reversing and waiting to make a new higher high, right? So many of you guys struggle with this, and I'll help you guys out with that in this video. So keep on watching and remain patient. So understanding before utilizing quarterly theory, market structure, and economical calendar framework. So bear with me here, guys. A lot of key points in this slide, so stay patient and annotate, right? Within quarterly theory, the economical calendar is used as a strategic tool to identify high probability trading days. Understanding when economic data is scheduled allows traders to contextualize market behavior rather than react emotionally to volatility. What do I mean by this? Right, many of you guys are supposed to be utilizing the red folder news releases as gauges to where we should expect price to have an injection of volatility, and you are anticipating that volatility to be injected and not reacting off it based off emotion, saying if price comes up, oh, I'm gonna FOMO into a long and chase price. No, you are predicting this as a quarterly theory trader. You are essentially trying to identify where price will distribute or manipulate to then host that distribution, right? So these high impact news releases shouldn't startle you in any way, shape, or form, as it does many other traders, right? When they see these high impact news, their heart begins to flutter. They start to have palpitations and start getting worried or anxious about the news that is going to get released. You, as a quarterly theory trader, or as a trader in general, should have the mindset of a stoic mindset and an approach neutrally to the market, expecting this volatility to be injected, not in your favor, but again, to go ahead and support an overall narrative that you may have not yet already formed, right? The foundation of this approach lies in higher time frame market structure. When the higher time frame order flow aligns to the upcoming macroeconomic events, it creates a clear narrative and a directional intent, right? What do I mean by this? So if we're making higher highs and we have a buy side level right above us, what is most likely going to happen at that 8:30 news release? We're probably going to get a Judas, right? More times than not, we will get that Judas to then swing to buy side and then dump later on after that news ends up getting rated, or that news high ends up getting rated and that buy side gets rated, right? So again, expecting it with the higher time frame structure. If you're seeing higher highs form on the hourly time frame and we have unmitigated POIs above us, you are expecting that manipulation to then take place with that news driver, right? If we are having bearish price action, you should expect the opposite, right? You should expect that Judas to be lower and then price to retrace later on throughout the day as market opens, right? This alignment enables traders to anticipate how price is most likely to behave before the news is released, rather than reacting after the volatility has already occurred. So again, it is it's way better to predict where the price is going to spike to or hit off of just assuming and then working upon that, right? It's not that hard to expect it if you have a clear draw on liquidity. And a lot of the times that higher time frame structure, or most of the times that higher time frame structure, is going to allow you to then gauge where that draw on liquidity will be, and then allowing you to go ahead and conjoin with the economical calendar and having those high impact red folder news events stimulate that move to your draw on liquidity or POI. Right? A common misconception among traders is the belief that news events themselves create distributions. In reality, the distribution is determined by prior price action and structural positioning, right? News serves as a catalyst, not the cause. The market typically reveals itself beforehand through structure, displacement, and positioning. So what do I mean by this? Many of you guys think that news is what's actually causing price to send price to that buy side level. That is incorrect, right? Price was already going to achieve that buy side level whether you like it or not. News was simply just the catalyst that ignited that move up, not the fact that it was the reason solely only that we went upwards. No, price was going to go up. It was a matter of when, not how. Okay, so that news event that you guys see, that high impact red folder news or orange folder news, depending on the severity of it, is going to be the catalyst, not the cause to the distribution up higher or lower. So do not expect that high impact news to serve importance to you in terms of direction. Simply just that move was going to be instilled one way or the other, right? Also, as mentioned in this paragraph as well, the structural positioning of price, right? So if price manipulates in London and creates a daily cycle sequential SMT, and the 6 a.m. candle is distributing up higher, right? Again, I said I was going to mention fractals. I'm mentioning it right now, right? The 6 a.m. candle is still in that distribution up higher, and we have an unmitigated POI above us with time-based and structure-based POIs. What can you expect price to do at that 8:30 news release? Pump up higher, not lower, right? Or validating that fractal bullish distribution up higher and supported by that daily cycle sequential SMT. If that sequential SMT was not installed at the lows, the probability of price revisiting those lows one more time at news will be higher, but not zero, right? So again, many of you guys need to understand that the market is going to hit those POIs and that the news is just the catalyst or the ignition to that POI being mitigated, right? Structure always takes precedence, right? This principle must be deeply internalized by every trader operating within this framework, right? You guys have to understand that structure trumps everything in the market because it is what the market has already done and will indicate what the market will do. Remember that you guys utilize structure-based POIs as Kraken correlations and time-based POIs as Kraken correlations supported by those structure-based POIs. Remember, sorry, those structure-based Kraken correlations. My apologies, right? So remember, guys, that sequential SMTs made by cracks and correlations within structure. So understand the importance of structure within your trading. It is not just something that you guys should brush over your head. All right. Now, why do I mention all this regarding economical calendar and framework? And Halo, why are you explaining this? Well, because in many cases, we're going to have red folder news events. And in most cases, the red folder news events tends to go ahead and deviate you guys from your narrative or cause you to go ahead and change up your narrative for unnecessary reasons only because you're scared of the red folder news. Do not be scared of it. Embrace it for what it is, a high impact red folder news that is going to inject volatility and spike the price movement to where it is intended to go to, right? Use that as your advantage and reassess as need be. Do not be scared of red folder news. Embrace it. That's why I mentioned this slide as the first one. Now, our objective to build a narrative is grounded in three key components, right? Our higher time frame order flow, our lower time frame confirmation, and our contextual alignment with scheduled economical events, right? When these components aligns, traders gain clarity on expected behavior across the next 15 minutes, hour, or the next trading session, right? This process allows all of you guys to identify high probability price points where executions both become calculated and repeatable, meaning you guys will not be assuming where to enter. You will simply just be rinsing and repeating a system that's already instilled into your minds, utilizing these three components: your higher time frame, your lower time frame, and your entry. All these three things are composed and are calculated with structure, right? Your higher time frame structure, lower time frame structure, and your entries. These are all structure based, right? Why do I mention structure based? Well, since many of you guys enter off of CISDs and not 10-point reactions or off of IFEGs, you are entering off of structure-based entry confirmations, not time-based entry confirmations, as many traders are essentially doing, right? So you guys need to understand that your higher time frame, lower time frame, and entry are all dependent on this one key component. So focus on this key component when reviewing the charts, right? Also, what should you guys be doing in terms of aligning all these? Is your lower time frame alignment with the higher time frame, or is it against it? Is your entry supported by the lower time frame or confirmation, or is the lower time frame confirmation not even existed in the first place, right? These three all need to coincide. So we have structure, narrative, and execution. This is the foundation of consistency, which will allow all of you guys to constantly find footing on the charts, right? Structure, then narrative, then your execution. If structure isn't there, your narrative will not be there. And if your narrative will not be there, you will not be executing. So please take all this with a grain of salt and analyze, is structure present? High probability structure. If the answer is no, the narrative will immediately be reduced in probability because you are having trouble identifying structure. Right? Is it accumulating, manipulating, distributing? Right? And if narrative is there, then execution should shortly follow, depending on where we are in terms of the higher time frame and lower time frame structure. So, big slide here, big slide here. Now, why is this important, right? So, structure-based and time-based POIs, right? Structure-based points of interest or POIs and time-based POIs hold equal importance when identifying trade targets and constructing a high probability narrative, right? When developing a narrative, the first question must always be, has a higher low or higher high been formed and mitigated in a way that supports the current directional bias? Meaning, have we rated buy side or sell side? Has that rate of buy side or sell side, if it's there, supported the overall bearish or bullish market that is present? If there is no rate of buy side or sell side, is price wanting to see the high? Is it wanting to see the low? Do we have anything that's igniting that move to the high or to the low? Right? All these questions will be flowing through your mind, right? This confirmation provides a structural validation for the direction in which the market is distributing. Without this, directional conviction remains incomplete. In parallel, traders must evaluate time-based points of interest, such as true opens, NWOGs, and NDOGs, to determine whether price is respecting or reacting to institutional time boundaries, right? So essentially, these true opens, NWOG, and NDOGs, these time-based POIs, will allow you to gauge what price is doing. In many cases, fractals, right, you will have price disrespect true opens or time-based POIs, and the second that hourly candle, 15-minute candle, 4-hour candle, daily candle closes, and we have a new daily candle, those true opens, for some awkward reason, end up starting to get validated. Why? Because we've already sealed that range, or we've already closed that range off. So keep a close eye at your time-based POIs and see if they're being respected or disrespected, and why. Right? These time-based references often act as areas of accumulation, distribution, or displacement that reinforce the broader narrative. As I already mentioned prior, fractals have a huge influence in this, right? But your true opens, NWOGs, and NDOGs will essentially be giving you the insight of what the market wants to do within the next 15-hour, 4-hour day, week, month, right? If no clear distribution is present, then highs and lows and time-based POIs become the primary framework for identifying where manipulation is more likely to occur. These POIs often serve as catalyst that initiates the distribution for the session, day, and even the week. What do I mean by this? If we're accumulating, right? So somebody in the chat mentioned this in a question. Halo, how am I able to identify market, or do I look at sell side when I'm looking at market maker sell models and buy side when I'm looking at market maker buy models? I say the opposite, right? You're not supposed to look at the sell side on a market maker sell model, as that should be quite obvious. You should be looking at the buy side references to then initiate the distributions back down to sell side, right? Because when you are reaccumulating or accumulating in the first place and you're expecting deliveries, you're not looking at the dead smack middle of the range. Your focus should be primarily on the extremities of the range, the highs and lows. Meaning, if we have an accumulation after an aggressive sell-off, notice, of course, are the lows forming cracking correlations? If the answer is no, look at the highs and also take a look at what's above the highs. Is there any true opens, NWOG, NDOGs above the highs that is supporting a sell-off back down back down lower, and the opposite for a bullish scenario, right? In essence, structure defines direction, time defines opportunity, and confluence defines execution. When these elements align, the narrative becomes clear and the execution becomes intentional rather than reactive. Meaning, when all these, let's say, confluences align for you guys, right? And all these, or these three, important points or bullet points end up coinciding with each other, your entry would come to you naturally. It won't be a guessing game of where to enter price or where you should be looking for an entry. It would simply just be entering. That's it. So, last slide. Sequential SMT and its importance. Now, I mentioned this because many of you newer guys within the Discord, or maybe some of you guys who are vetted within the Discord, have a common misconception that price, usually in some cases, tends to be supported by sequential SMT and only sequential SMT. That is an incorrect statement. Why do I say that? Sequential SMT is only as important as what you make it seem, right? Sequential SMT is supported by the underlying structure. Remember that structure is what actually creates a sequential SMT. Time-based cracking correlation also coincides with that, obviously, but it's a structure-based cracking correlation because it's made with the highs and lows, obviously within a certain time window, right? So when forming a narrative, it is critical to understand that sequential SMT does not determine whether the market is bullish or bearish. Common misconception for many of you guys. Why? Because some of you guys believe that you cannot short with bearish or with bullish sequential SMT, and you cannot long with bearish sequential SMT. And I tell you, that is bullshit. Sequential SMT simply supports a structure that the market has already established. Structure always comes first. Again, if you understand the importance of fractals, you will understand exactly what I mean by this. Because for those of you guys who don't know fractals or don't know the time frame alignments, specifically the ones incorporated with fractals or within the time frame alignment videos, they're the same one, you guys will not understand when the terminus of or the probability of these sequential SMTs reduce, right? So with time frame alignments, as Fear and I mentioned, those are basically law, and the only important thing you should be looking at are those time frame alignments. Those will dictate when and where the probability of sequential SMT is reduced drastically, and usually entails with the time frame alignments that are attached to the sequential SMT. So by utilizing the time frame alignments discussed previously within the other videos, traders can begin to identify where a move supported by sequential SMT may reach its terminus. Fractals. This allows for a greater clarity around continuation or exhaustion rather than an emotional or premature execution, which is what so many of you guys have a problem with doing. Quite a few of you have an issue with entering prematurely or identifying when price will shit the bed in terms of exhaustion and say, you know what, it's done distributing. So many of you guys are left guessing when price will end up ending the distribution or terminating this type of, move. The answer is within the time frame alignment videos. If you reverse engineer those alignments that I give you guys, I promise you will find the answer to this question you may have. It is simply just by utilizing the sequential SMT in conjunction with the alignments I provide in the video. A common misconception is believing that selling above true opens and buying below them is a foundation of narrative. In reality, those levels are not meant to create bias. They are meant to support an already established directional conviction. So your true opens are not meant to initiate a narrative. So many of you guys have that misconception that, oh, if we're above true opens, only short. Incorrect. Because guess what? Let's say we have a bullish market, right? New week opening and previous week creates sequential SMT, and we're above true week, true day, maybe even true session on every single asset class. But guess what? Since the drawn liquidity is bullish, you're going to be shorting a rocket. The only way you can identify which one is going to hold is by, one, your overall narrative. Is price wanting to go higher or lower with and supported by your structure? And second of all, your sequential SMT in conjunction with the alignments. Are those cracks and correlations that we have supporting a bearish move? Or do we lack the sequential SMT to go ahead and ignite a bearish reaction? And is a time frame alignment not supporting that reaction in the first place, right? Tools such as sequential SMT and true opens enhance confidence, but they should never be the sole reason for directional bias. Narrative must always be built for structure or built from structure first. Do not believe that sequential SMT and true opens are supposed to replenish the lack of understanding that structure may not give you, right? You guys have to understand that structure is the most important thing. and the sequential and true opens are just going to give you more conviction with where price will go. They will not tell you what it's going to do, right? They're going to enhance the confidence that you may have in a certain draw, liquidity, or narrative, but it is not solely going to go ahead and give you the conviction to enter a trade. You need to have structure to identify that, right? Sequential SMT and time-based levels exist to confirm, not to dictate, right? When used correctly, they refine execution, reinforce conviction, and provide clarity, but they never replace structural alignment. I cannot emphasize the importance of that one sentence right there. They never replace structural alignment. So do not expect them to, because they never will. All right. Now, let's go real quickly on TradingView to show you guys a quick little image here of a prime example of overall narrative. So as you guys can see, this is the NQ chart, right? With NQ seeing higher highs here all from Friday. And then we have a pretty decent sized NWAG closing above the previous week's high, and then we reaccumulate, right? Now, the question is, are we wanting to see higher or we wanting to see lower? Well, we have relative equal highs here from 2 weeks ago on the NASDAQ. And as you guys can see, we have a weekly cycle sequential SMT at the lows. Now, is the weekly cycle sequential SMT at the low supporting the bullish narrative? No, it is simply just giving a conviction for that narrative, right? Why? Bullish sequential SMT at the lows, supported by, again, the weekly cycle sequential SMT. Higher time frame draw is bullish. Why? We have an intermediate term high that's left unmitigated. And I'm pretty sure we have, end dog lining up within that intermediate term high as well. And a bunch of end dogs and end logs above it. You also have an unmitigated end dog above true week open as well, which is yet to be mitigated. So our draw is bullish, right? End of year as well, expecting price to push up higher. So what does price do? Weekly cycle sequential SMT, cracking correlation number 1. Then we form another cracking correlation in the lower time frame down here, with the lower time frame supporting the overall bullish narrative, giving you conviction to first your previous day's high, and then second of all your POI, which is the intermediate term high. Understand that the sequential SMT does not give the narrative in this scenario. The narrative is instilled by overall market structure. Are we bullish? Are we bearish? Are we making higher highs? Are we making lower lows? Right? In this case, swing high, swing low, time-based POI being the NWAG, as you guys can see here, and an intermediate term high structured based POI within that NWAG as well. So cracking correlation, weekly cycle sequential SMT, lower time frame cracking correlation down here, ignites the bullish move, lower time frame and higher time frame align to then support our overall bullish narrative to buy side, right? I hope you guys all enjoyed this video on how I end up getting draws in liquidity and my narrative. If there's any questions that you guys may possibly have, feel free to ask me and I'll gladly help you guys out. All right, have a great day. Have a great New Year's, and I'll see you guys later. Peace.